Hey, YouTube. What's happening? Alright, let's do a quick analysis on Bitcoin. Um, where it's at, what it's doing, where it's been. So, per usual, we're going to go macro to micro, start here on a monthly time frame, and just take a look at what's going on. Um, just a quick recap of what I've got on the screen here. This is just price action charting, green and red bars, very standard using TradeView. Solid product. I don't have a financial relationship with them or anything like that, so I can't get you deals or whatever. But highly recommend um, their product. It's very easy to use and very quality. Rarely have any issues. But yeah, so let's take a look at Bitcoin because um, everybody loves crypto. Crypto is extremely volatile, which means you can make high gains, high rewards, but also that comes with high risk. So you, I personally trade this like I do any security. Um, when I look at a security at the underlying nature of it, I use that for kind of forecasting, if you will, trying to figure out what it might do, etc., and when, since the name of the game here is timing. Um, we're not doing. I don't typically do like a 5 year or a long term buy and hold type thing. Um, I typically do anything from like a quarter lower. Um, I've traded all the way down to like minute minute time frame. Um, so and it's all the same stuff, frankly, because these charts are fractal, which means um, the monthly is going to show the same patterns, relatively speaking, as the weekly. It's just a little bit more detailed because there's less trades per bar, more bars, but it's the same trades, right? So, like, if you look at these here, those are the same trades here, right? It's just this monthly bar is the last four weekly bars combined. That's all that is. So, if you have a strategy and it works, you can trade it on any time frame, which is helpful because then you can make money faster. So, that's all that is. But yeah, let's just go back to Bitcoin here, macro, take a look at the monthly real quick. Um, as you can see, 2020 Q4 it really exploded, right? So let's just look at what happened here. Price action just kind of goes parabolic, right? Straight up for 6 bars in a row. And let's see what the other indicators tell us. So the bullish directional index follows suit. Nice 45-degree angle upside. Volatility, it picks up a little bit. There's a little dip right at the breakout, and then it picks up. So that's cool. It is over. It is over 20, and it never really got too much lower than 40. Okay, 35. So volatility, as you can see, never leaves Bitcoin. Look at this. Like It's just constantly volatile, right? And so when you look at the momentum, they're bullish, and then literally 7 bars in a row. And then as you can see, it starts to lose momentum here and you have a correction. So these bars are very useful. I mean, you also want to know short-term candle patterns. This right here suggests equilibrium, which is relatively common at a top. Like, you have a massive move, it's only economically common sense that it needs to balance out, right? Because a lot of trading is about supply and demand, and it has to average out, and that's why people will use moving averages to generate buy and sell signals. I don't personally use those for that or use them much, but some people do, and they can be used effectively if you know how, if you take the time to develop a strategy. But by themselves, I don't think they're as useful. I'm a big fan of using multiple confirmations. That's why I have 3 extra indicators on here. Volatility, momentum, and then the CCI is kind of like it takes an average price range based off like a very near term historical price, but like essentially this to me is cash flow, and so it does help you kind of get signals early. So now here, like you can see, when the price action started breaking out here, you can see that the CCI actually broke out uh, right on that bar, like in between that green bar and this red bar. Like it started breaking up. So like when this opened and the CCI started moving up, some people who are less risk averse will buy in just in case this happens, which it did. And so risk averse is kind of relative, right? Because wherever you buy in, you can always have a stop, like right at that buy-in price or very close to it, so to limit your risk. So like you want to get in at a good spot and sell at a good spot, but like if you're still trying to figure things out or whatever, or maybe you want to get away from paper trading, then just go ahead and have real tight stops. You can always buy back in, especially when it's as volatile as Bitcoin. But essentially, like, what I'm looking for is price action to kick off, and then one, two, you have 3 confirmations, and then as the move's going, they're all telling the same story: increasing directional bullish, increasing bullish momentum, increasing CCI. And then you can take it a step further. The CMT, the Certified Market Technician method, is 2-bar confirmation. So here's one. So if you can see, this bar actually closed higher than this one, and so did this one. And so on this open, you're long, especially when you've got the CCI way up here and these bullish screaming the same thing. So you're long right here about 19,889, and you stay long until the CCI comes back to the blue. So now that's on this bar. You don't necessarily know, like, once you saw, that's why you have to know different, that's why the CMT is so good, because once you see this, you're like, okay, that's a common short-term pattern for a possible reversal. Then you see like a blue bar here. This shouldn't be blue at the very end. Like it should be blue. Like it can actively change color. So once this comes down like a certain amount, it will turn blue, even if it was like only halfway or whatever. And then, like, that's kind of your clue. Because if it was a continuation, it's not really going to go blue. It's going to consolidate sideways and stay green and then continue upside. But anyway, so here you have it. I mean, that's just how it is. So, like, that just gives you confirmation that what the data you're looking at is good. It's valid. Like, you can rely on this to an extent. You always need to have tight risk management, but as you can see, you can fairly rely on all these indicators when they're all telling you the same story. Like, there's a move coming, and it's a good one. That's a trend right there, 6 bars. Then it ends. Then you have a correction. That's totally normal. And then you have another, like, small move. Then a throwback. And then a move higher. So all-time highs. And then that's pretty standard. So, like, now if you look at this like Elliot wave, right? You got a wave one, then you got, the B correction. So that's 1, 2, 3, a slight 4, and then a finish, a five wave. So it's all pretty textbook, and then you have a reversal. So after wave 5, an Elliott wave, it's going to reverse for correction, and what you see here is pretty textbook as well. Because these waves, the A, B, C style, I mean, as you can see here, it's pretty textbook. Um, and even here, so this correction never comes down to the starting point of wave one. Okay, and then you got this. This doesn't necessarily make new highs, which is like kind of like making this kind of a consolidation pattern. But I mean, uh, it, yeah, you could probably go on a higher time frame and that would all mesh and it would look pretty good, pretty typical, right? So let's look here. So 1, 2, 3. The third wave is always the biggest, the longest. So you've got like see, you've got like kind of like this is a correction, A, B, C, right? And then it kind of starts over. 1, 2, 3, massive 3 wave, which is totally textbook Elliott wave. Then you got a 4 and then a finish with a 5, and now you're on a corrective. So it's got to correct, and so we're kind of at a pivot point because this is going A, B, C, but what's going to happen here is this going to turn into counter trend. So right now it's like trying to reset, right? And like on these corrections, the A and the C wave are typically the same size. And so if you look at this, it's kind of there. All right, so let's look at range. So, and then come here. So like, if this fills, which they tend to do, as it bottoms, it's going to come down, it should come down into this range and either bottom out or go counter trend and come back down into this area, back to value basically. And so what we're looking at here is simply confirmations. So you have a pretty standard A, B, C corrective wave going here. This needs to finish. So at the end of the month, we'll reanalyze and say, okay, corrective wave C is finished. Now what? Is it going to consolidate and then boom upside again, or what? And so that we're going to look at all these other things now. Look, momentum's going bearish here. Not a great sign. So suggests counter trend. The CCI isn't really at the top of the blue. It's not like this is just kind of bottoming out here and this is at the top, so it could easily break upside. And then you've got the directional indexes kind of flirting with each other here, right? So it could easily cross bearish and then continue downside. And so a lot of that can happen for fundamental reasons, but like technically speaking, this is kind of in a spot where if you're kind of aggressive, you would go short. Maybe put a tight stop right at the top of the bar or something. Very small loss, just in case it kind of bottoms out and then volatility comes in and slams against you upside, which can happen now that you can short Bitcoin. So definitely want to use tight stops, but like you also have a red dot here, so it's going into a squeeze, which means tight consolidation, and it's going to have to break out. So let's go to the weekly and see what's going on there. So that squeeze has fired. It's interesting. Here's just identifying some of the waves, some of the smaller waves. Like I said, it's fractal, so when you look at like if you go on a higher time frame to get the macro and you're looking at it and you're like, okay, these two green bars are wave 5, and then you come to a weekly Fibonacci, or not Fibonacci, Elliot wave is such that that 5 wave is actually consisting of two subwaves. And as you can see, it's pretty textbook. So that's what I mean by this stuff is fractal. Like you can go on any time frame and trade different patterns once you identify and learn patterns. But anyway, this weekly squeeze, I mean, that's fired, but it looks weak. There's no volatility. The momentum's very low. Look at the price action, just very small bars. Like as you can see, it broke out lower here. That makes sense. So good move. But now the CCI is kind of leveling out. Even though price is technically at its lowest, it's kind of curving back up, right? Flirting with going up again. And this is green. So I guess we'll see what happens, right? It just looks weak. So that move downside could just be consolidating, and then it might continue down. So look at here's a squeeze on the daily with a pretty strong volatility level close to 40, which is ideal above 40, and then very strong directional bias of bearish. And as you can see, it broke support. Now it's consolidating in a very tight consolidation squeeze. And you can see there's the fractal again. Here's the waves. As you can see, there's a bunch of little smaller waves in those big waves. And so that's why some people trade the higher time frames. They want to avoid all that up and down, ebb and flow. But yeah, I mean, this is looking bearish. So, like if you look here, if you look at this pattern here, this is a descending triangle bottoming pattern, right? It made highs and then it corrected A, B, C, and then it goes into this descending triangle pattern. But then it breaks out upside real. So this is a real move to new highs. Doesn't quite make it. And on the higher time frames, that's kind of when the blue bar is set in. So that's when a reverse is coming. But I mean, it's just correcting sideways. And then here's an S right here. This is an ascending triangle pattern. Kind of a symmetrical. It's a triangle pattern, right? And then it breaks up upside here, but fails. It busts. So then it comes back down here. And now it's consolidating in a squeeze pattern. The volatility is kind of coming down, so the move is probably going to be ending soon. Like, that's kind of the halfway mark. So it could move downside again. Just have to keep an eye on it. But once it's in a squeeze, it's gotta move. It's gotta break out in one direction or the other. And the key is to try to figure out what time frame you should watch. And that's typically the best one is the one that the squeeze is on. And then you can go maybe one lower and kind of manage it there, see what's happening. Like there was a squeeze here, right? The squeeze is over. It barely triggered. There's barely any volatility, not much momentum. So it's just kind of consolidating. But it's at a good spot. Like it should make a move pretty soon. What I'm noticing is that like price is kind of the lowest it's been in a long while. Like it broke support, these two battle zones here. And yet the CCI is kind of even with this price action here, even though it's lower. It shouldn't be since it's based on like an average historical. So that to me, with the tight consolidation here, not much action. It just tells me that cash flow is kind of stagnant, but it can't stay that way forever, especially because it's so volatile. But it's in a good spot, so like it could easily make a move, but it's not looking very good for bullish. Squeeze, bearish. This is kind of like in a descending triangle top pattern. Like it's squiggling down side. Like it's gonna try to like this is like gonna it failed to go higher here, so it's like gonna try to break again is what it seems like, especially if this goes. So yeah, I mean, my opinion is that Bitcoin is gonna go lower. It's just consolidating sideways right now in a squeeze. It's gonna pop and probably come down, but we'll see. I mean, there's a reason CMT uses 2-bar confirmation because you can make more money getting in a trade early just because it's less volatile, so it's more profitable when the volatility kicks in. But that means you're kind of taking a guess, so more risk. Whereas if you kind of wait, if it is a real move, and that's why it is beneficial to trade higher time frames. Like, look at these real moves. Like here, look at this one. And even downside, but then back upside and then downside. Like, there's some good size movement here. So, like, if you're actually, like, seeing what's going on, okay, decreasing momentum, decreasing directional bias from bullish to bearish. The volatility is kind of peaking. The cash flow is kind of coming out, right? it's kind of like, okay, I need to sell. I should probably sell. If it goes up again, then I'll wait for a good two bar, like here. Here's a good two bar. Here's a good two bar, and then it goes up. Here's a good two bar move, and then it goes all the way up here. Um, downsides. Downside's different. You can't really. I mean, here's a good two bar on a downside, but like downside's a little bit different because it's way faster, typically shorter. It's typically a throwback or a correction, and corrections go in waves. So you can, you know, get a little bit bigger moves on corrections than like this throwback here, but they tend to go faster and they're shorter moves. But here, this wave 3 into 5, that's good. I mean, that's the ideal right here, Elliot wave. Get in wave 3, ride it out to the top, and you're making good money, and then you short it. But hopefully this illustrates like how to use indicators for confirmations, versus just using price action, or even just maybe one indicator like a moving average or something that isn't particularly the best suited for generating signals and timing, um, in my opinion at least. But I mean, I like a lot of confirmations. I look for two bars where it's possible. Then I use confirmations and these other indicators to get context on the market. Like had a nice move, correction, a nice move, and now it's just correcting. And like you look here, it's kind of in like a head and shoulders pattern here, but it's just busting. Like it's breaking support here in a squeeze. CCI is low. That's just not very bullish. Like there's no reason for me to go bullish yet, and there's not even really a reason for me to trade. It's just in a good spot where something could happen. I could get a two bar. I could get a nice two bar confirmation move, and then I'm looking at context again, and maybe you know committing my market then, but committing my money to the market then. But until I see a two bar and the rest of the market's committing their money, there's no reason for me to. So I'm just watching. But that's it. It's in a good spot. I'm gonna keep an eye on it. So that's where that's at. So let me know if you like that. Leave a like, subscribe, leave a comment too. The main purpose of this channel is to facilitate discussion. So leave a comment. Let me know what you thought, if you disagreed, if you think, I missed something or something could be better, etc. Maybe share an experience. But yeah, anyway, I hope your trading goes well. Take care.